Hello everyone, I'm Corey Mitchell with TradeThatSwing.com, and in this video we're going to look at trading mistakes. Mainly, I want to address some of the trading mistakes that a lot of people don't even realize they're making. Also, we want to talk about tracking some of our mistakes so we actually realize how much they're costing us, and then how to reduce them. So there is an article on this with, if you just go to TradeThatSwing.com, you can type in mistakes in the search box and this article will come up. So we're going to go over some of the things in this article, but you'll also get, a few extra stories and stuff as well from personal experience and traders I've worked with, things like that. So tracking our mistakes is really important, or even just being aware of them. That's why it's nice to have notes. I actually just started a new little notebook here, and in it, kind of each day, I'm writing down what my plan is for the day, the stocks I'm trading, that kind of stuff, the strategies I'm trading. And then at the end of the day, I'm going through and saying, like, okay, how well did I perform relative to how I was supposed to have performed? And that can sometimes add up to a lot of money. So for example, today I had a nice runner going. I actually had three nice runners going, and one was lasting a little bit longer, and I decided to trail my stop loss in closer than I'm supposed to. And I was actually telling myself throughout the morning, I was telling myself, you know what? My job is not really to predict where price is going. My only job is to just trail my stop loss when I'm supposed to. And then I kind of talked myself out of it. I had this big run going, and I'm like, wow, it's going to pull back. And it did, and I got stopped out for 3R. So, let's say you were risking $100 on that trade, or maybe $1,000. You make your $300 or $3,000, and you feel okay about that. That doesn't really feel like a mistake. But of course, as soon as I got out, it kept running, and I should have still been in that trade, because if I follow my plan, I'm still in it. It ended up being very close to 6R by the time I would have actually got out. So you're talking about a difference just on that one single trade of, if you're risking kind of $100, then you're looking at a $300 difference in your day. If you're risking $1,000, then you're looking at a $3,000 difference. And, to be risking $100 on a trade, you only kind of need a $10,000 account. To be risking $1,000 on a trade, you want to be probably up in the 100,000 or higher. So, that's a big difference, right? So the point is that if we started adding all those up, you might realize that all of a sudden it's not your strategy that's the problem, it's you. And I think this is what a lot of people don't like, is that if you start tracking mistakes, the easy solutions go away. In a way, right? You can no longer it's not a solution. I shouldn't say the easy solution. The easy excuses go away. You can no longer just blame the market or say, stupid strategy or something like that. It's like, I would have made 60 grand this month if I followed a strategy, and instead I lost money. It's like, and that actually isn't much of an exaggeration. It's like most people are in that situation where they could be very profitable if they followed some rules, and they just mess them up all the time. And it's true, not all strategies are good, and not all strategies are meant for you. Some are going to be tougher for you to implement based on your psychology, but if we find a method that works pretty good for us, then we should have rules for how to implement it. So what are some of those mistakes? Well, the first big one is if you don't have a plan, if you're just taking trades randomly based on your intuition, especially if you're a new trader or what you think is intuition, that's probably not going to serve you well. I would call every one of those trades you take an error. If you are a very experienced trader with lots of market knowledge, you may be using intuition, but you have, a full repertoire of just, experiences and things you can draw on. That may be okay, but you still should have your ideas. They don't even have to be written down per se, but they should be, I would probably say they should be written down. Your outline of how to trade, so that you can compare what you're doing to what you should be doing with what you are actually doing. So the goal when it comes to trading mistakes is just to start to minimize these. We'll talk about a little bit more about minimizing mistakes at the end. But I want to go to this list here. So this is just a list that I came up with really quickly. Some of these have a direct R value that you can easily calculate, and the other ones have a more indirect impact on our profit and loss. So you skip a trade maybe just because you're scared. So it is a good one. There was no reason to skip it. We were just scared. That's obviously going to have a direct impact on your profit. So if I skip that, even the trade I messed up today, if I skipped it totally, I would have missed out on 3R. And if I would have just stuck to my system, I missed out on 6R for that trade. So big difference in performance. Skipping trades, especially when your profits are generally bigger than your losses, is a very painful mistake, because you're trying to avoid the little loss, but you could end up missing out on one of your big winners. And this is often a thing people fall into. If they've had a couple losers, they start to get scared and they back off, and then they miss the trades that would have made back all their losses and got them back to profitable, and then they get into this kind of vicious cycle. So skipping trades, that's a tough one, usually due to a fear. So skipping the trade is just kind of the surface. It's like, I have a problem with skipping trades. But really, what's going on to the surface? Why are we so afraid to put that trade on? Is it that we are highly attached to the result of each trade? That's problematic. If we have a fear of losing, do we really know our strategy well? Do we trust it? So once you start kind of looking a little bit below the surface of these mistakes, that's when you start to get into the real stuff that we need to start working on. Took a trade that wasn't valid, possibly listening to someone's ideas, or you see something on the news and you think, that's probably going to go up. Everyone's talking about it. I'll jump in, and you end up losing money. Or maybe you make money. That's probably even worse. But you took a trade that wasn't based on your own tested and methods that you've looked into. Generally, when I've done these, they have resulted in losses. Some of my biggest losses ever have been because of this. It's, again, looking below the surface. Why do we need to get into that trade? Usually it's over eagerness to make some money. We're pushing ourselves more toward thinking about the money as opposed to the process. I think if you hear any professional athlete or professional trader or anyone talk about what it takes, they talk about a process of getting there. And if you focus on the process, the results take care of themselves. If you get too results orientated, and I'm not saying don't think about where your goals are and things like that, but you get there by thinking about the process. If you just start thinking about money, you're going to get lured into all sorts of bad situations. Don't have a trading plan. Every trade is a mistake. We already briefly discussed that. Wrong position size, or don't have a position sizing method. If you're day trading, sometimes we're making an approximate position size. That's just going to be the reality. fast moving market conditions, you're making a quick calculation in your head of, my stop loss is going to go $1 away. How much can I take based on my account size? But if you're a swing trader or an investor, your position sizing should be pretty fine-tuned because you have time to calculate it out. And it can make a big difference, right? If you make 3R on a trade, but you only took half the position size you normally do, you only made 1.5R technically, based compared to what you'd usually do. And if you had a loss that was on a full position, you lost a full R on that. And even though you made 3R with only half a position on another, you're only up slightly on the day, right? Because you mucked up your position size on the one that worked out. Of course, it could go the other way too. Maybe you take a wrong position size and you think, oh, awesome, because it ended up being a loser, so you only have a little loss. But that could have just as easily been a profit. So we want to be aware of that, and whatever position sizing method you choose, and maybe you do have a grading system where some trades you take bigger position sizes than others. That's totally fine. The point is, it's not a position size that I said you have to take. It's a position size that you determined you were going to take, and how did your performance vary from what you said you were going to do versus what you did do. Taking too many correlated positions, that'd be more something like in Forex or even swing trading stocks. If all your stocks look exactly the same charts, you are highly correlated. I'm not saying that's wrong. All I'm saying is if that was against your rules, then you would need to be aware of that. Getting out of a position before a planned exit, that was my thing today. So what was the underlying fear? I didn't want to give back the money I made. Again, a little bit more results orientated as opposed to process orientated. I got stuck thinking about one trade instead of 100 trades, right? Because if I think about the 100 trades, if I try to move my stop loss a little closer than it is, for that one trade, it might make a bit of a difference, but over 100 trades, I know that I'm better off waiting for those big wins. And there's also the problem of getting out of position later than planned. So it moves how you want, and then you keep holding it. You think, this is the really big one. I'm just going to keep holding it, and then it starts coming back against you. You're afraid to sell it. Or maybe it moved right toward your stop loss and you think, I'll just give it a little bit more room, slippery slope, right? Well, that's how you end up in all your big losers. Still aren't out of a position you are supposed to be. So if you're sitting there reading this and you have a position that you're not supposed to be in, you are no longer trading, you are simply hoping. And if you keep doing that, you won't have a trading career. Distracted while trading, which could lead to any of the above errors. This is all part of a process. So if I get distracted, I have a process I have to go through before I can start trading again. If I get distracted, basically my trading program gets closed and no new trades can open. I have stop losses and stuff out there on existing positions, but basically I can't, or at least I'll minimize the screen if I get distracted, because I don't want to get into a situation where I just look at the screen and think, oh, there's something, you see a bar move quickly and you're like, oh, I want to get in. That impulse. I've been doing this 20 years and I'll still get impulses if I get distracted and I look back at a chart and you just see a quick movement. There's, sometimes before you can even stop yourself, you'll have an impulse to do something. And all it takes is one button click to get into a trade. So I protect myself against that. So if you get distracted while trading, you want to be aware of how much that costs you. It might not be a direct dollar figure, but you got to look at it. It could be because maybe you missed a trade, or maybe you missed an exit, or you messed up your position size because you were distracted. So again, that's like an underlying cause for some of these other things. And if you're getting distracted, come up with a process. How do you stay on task? I've known people who set kitchen timers or their cell phone to go off like some people have done it every 3 minutes. Person I originally heard it from, he set it for 5 minutes. Every 5 minutes, there'd just be a little ding on the phone. And that would bring him back and remind him like, oh yeah, what am I supposed to be doing? Right. Sounds kind of dumb, but chances are 99% of people watching this, including myself, will actually, probably 100% of us, will get distracted while we trade. And we need a process to help us with that. If we don't, that distraction will hurt our performance. Didn't go through a pre-trade routine. Again, if you have one, I do recommend some form of a pre-trade routine. It might change over time because we change over time. Things that I needed to work on years ago, I no longer do, but there's other things that have come up which, like my mornings, are more hectic with kids, which was not a issue 10 years ago, but it is now. And so my mornings change, and so does my pre-trade routine. But as long as I feel like I'm getting into a good mental headspace before I place trades, that's what matters. Again, if I don't, it might be hard to kind of correlate an exact R figure to that, but I definitely can kind of sense that my trading's worse when I haven't properly prepared myself. So, yeah, can't put quite an R value to it, but I definitely notice it. Not as measurable, but they could lead to errors above. Wanting to make a trade instead of letting a trade come to you. So we address these. These are kind of more like underlying issues which could bring up skipping a trade, getting into too many trades that we're not supposed to be in. So wanting to trade instead of letting it. That's like an underground, kind of below the surface feeling where it's like, you're really amped up. You want to place trades. If I'm going to be amped up about anything, it's amped up about following the process, about being disciplined. That's what I want to like pat myself on the back for. And it's like, yeah, man, you followed your process. It was really tough in that one spot. It was pulling back against you, but then it would have been easy to just get out of that trade. But instead, you put your stop loss where you're supposed to, and that thing took off again. That's what we want. Nice trade. So I get more amped up about the process, the discipline, the patience, rewarding myself and patting myself on the back for stuff like that, as opposed to results in hitting buttons. So most people pat themselves on the back if they're just all amped up about hitting buttons. Wrong thing to be amped up about. Too many positions at one time could mean attention is divided. So I trade quite a few stocks at a time. It wasn't always that way. I started with one, and then I added one, and then I added another one, and then I added another one. And so I'll watch a whole bunch. I'll probably only be actually trading 2, maybe 3 at a time. But I can watch a whole bunch, and I'm okay at it because I know what I'm looking for. I'm not overthinking it. But someone who's brand new, if they try to watch 4 or 5 stocks like I am, they're probably going to fry their brain. So you start where you're at and you work from there. So if you can trade, if you're trading one and you're not making many mistakes, then maybe you start adding in, a few more stocks or things to watch. But if your attention's getting really pulled and you're not able to really execute on one asset, maybe you're not going to be so good at 2. I have heard the other argument, which may apply to you, is that with one, you have these stretches where it's pretty quiet, and that's when people tend to get distracted and start doing other things and then messing up. So there is the argument that maybe if you traded more, looking at a few different stocks, let's say you're a little more active in what you're supposed to be doing, following the stocks, and that might actually make you less prone to mistakes. So you have to decide which one it is. Are you someone who does better when you're actually looking at lots of things and being a little more active? Or are you someone who kind of needs to just focus on one thing? Blaming others for mistakes. Yeah, trading is a entirely 100% on us responsibility. Even down to the brokers we choose. There's nothing that we didn't do. We deposited the money, we picked the broker. Maybe they go bankrupt, screws us, whatever. We picked it. It all comes back to us. And we decided the strategy we were going to trade. And we, of course, have, even if it was someone else's strategy, we can't blame them. We're the ones putting our money on the line. So if I learn a strategy from someone else and I don't like it and I lose money on it, hey, that's on me still. I decided I was going to use that approach. Obviously, I didn't go through enough preparation with that strategy or figured out how to make it applicable to me. So, it all comes back to us. If we're blaming others, we'll probably never be a good trader. Simply because all these mistakes that we keep making, they get diverted and we avoid doing the actual work that we need to do ourselves. Didn't go through a pre-trade checklist, didn't perform a risk-reward analysis. These are, again, things that I like to do, have a little checklist of things that I check off before taking a trade. Again, this like a pre-trade routine. A pre-trade checklist changes over time because some things become automatic. You don't really need to think about them anymore. Maybe at the beginning, you got to check, is my stock in an uptrend if I'm going to buy it? After you've been trading for a while, you know that you only buy in an uptrend. So if you don't really need to check it off your list. If it becomes a problem and you notice, oh, hey, like I bought that and it wasn't in an uptrend, then that's something you might need to bring back in and remind yourself of. But there's a whole list of things that are just automatic now that I don't need to check for, but there are things that I do need to check for. So example, I was talking myself through today about not thinking about the results so much, not thinking about individual trades so much, thinking about the process and that my only job is to move my stop loss once I'm in it, not trying to analyze or predict. So I had to remind myself of that. That's like a little checklist that I'm running myself through. You can do them pre-trade. I also have a little checklist that I do during trades. So lots of little processes that can help us. And if you don't do them, we generally don't perform very well. So maybe you're forgetting to do something like this, or you see a nice trade, but you forget to look at what the risk reward potential is. So you just jump in and then you realize like, whoa, my stop loss is huge on this thing. Like it has to move up so much for me to just make even 1R. And you realize, okay, maybe this wasn't a great trade to get into. Viewing a mistake that was profitable as a positive thing. So I've kind of mentioned this a little bit throughout. I don't know if you caught it, but sometimes if you had like the wrong position size and you had a losing trade, if it's a smaller position size, you think like, yeah, I'm good. I had a wrong position size, but that means I only lost like a tiny bit on that losing trade. But it was still a mistake. And we don't want to applaud our mistakes because given enough time, those mistakes, they just keep eroding profits, right? So assuming you have an okay strategy, mistakes are going to erode that. Trading while sick, angry, depressed, or super excited. I think that last one, maybe people can understand, like if you're really angry and you're like, you can't really think straight, probably not a good time to trade. If you're super depressed and again, you can't really think straight, everything looks bad on your chart, probably not a good time to trade. If you're sick, this one's kind of a debatable one. Some people don't mind trading while they're sick. But again, you're probably not going to be in your best mental state while you're sick. You can, of course, gauge it. If you're really sick, I'd stay out. But any extreme state of mind isn't good, even super excited. So a lot of people, they like watch their favorite YouTubers or they watch movies and they think trading's like this testosterone fueled, just hitting buttons, yelling at your screen. No. Like, that might happen occasionally when we get into a bit of a mess or something, but generally trading should be pretty neutral in terms of our emotional state. If we're getting extremely amped up or extremely angry, something's maybe a little off. And I'm not saying you need to be neutral to trade your best. I'm saying kind of from where you normally are. So there are traders who trade better when they're amped up. But even them, if they get too amped up, now they're outside of their ideal mind frame. For me, I like to be kind of at just like a neutral, kind of calm, almost like meditative state. Other people are going to be more jacked up. But the point is, where are you in relation to where you trade your best? First, you have to find out where you trade your best. I do have a thing on that, finding your optimal mind frame for trading and staying in it. But yeah, how far are we deviating away from that? And if we are, then that's a tougher one, because then we kind of need to work on our emotions and then do some of that deep work. Why are we getting so amped up? Probably because we're thinking about too much about very short-term results as opposed to the next 100 trades. If you think about the next 100 trades and you have a little mistake or you have a little loss, it's not going to matter. Of course, if you have a really big loss, you don't take your exit and now you've lost half your account. That is something to be angry about. You probably want to take some time off, figure out what to do with that position, because I have no idea what to do. People always ask me, I'm in a bad position, what should I do? I'm like, I have no idea. Don't put yourself in that position. And once you are in it, figure out, well, that's a topic I have an article on that. How to rescue a big trading loss. If you are interested, you can go up to the search and search that one. It's basically going to tell you don't get into that situation in the first place, but it will give you some psychological tools to help you assess what to do. So we can write these all down each day. Like if you're making mistakes and they are on this list, or there's probably other mistakes too. This was just, a list I came up with pretty quickly. Write them down, and then hey, what's causing problems in my trading? And please do not compare it to, if you've taken any of my courses or anything, I say, like, you have to make information your own. So please do not say it's an error simply because you did something different than I did, as an example, or someone else did. You have to come up with your own rules for how you will do things, and then look at how what you did varied from those rules, because you are not someone else. You will not end up in all the exact same trades, even if you're using a similar strategy. So it's compared against your own benchmark, which you set, not someone else's. This is your trading journal, your trading error journal, or putting errors in a trading journal. So you get to track what's a mistake, what isn't, how you think you could have done it better, why you think what you're doing could be improved on, or what was really good, and maybe you can focus more on those things as well. So how do we reduce mistakes? Well, there are some ways. I have some tactics in here, but the main takeaway is that once you notice a mistake, and not every time, like, be aware of it, but at the end of the week, let's say you go through your notes and you notice that your position sizing was off on 10 of your trades. That's a pretty substantial thing. like that could be contributing to a pretty big difference in R, and in terms your R being profit. So that might be something you want to address. Do some brainstorming over the weekend. How can you do better? Maybe you need to write down some numbers before you start trading. But basically, we want to get that number down. You made 10 errors last month in position sizing. Maybe it ended up costing you 3R, 4R, who knows. We want to get that number down so that next week maybe you only have a few mistakes, or maybe they're totally gone. And then you can start looking at the next thing. What's another area that we need some work on? And maybe you notice, like, during trades, you've been getting out a little bit early. Now that's the thing that you work on for the next week. Don't try to work on everything at once. Try to pick one mistake and make a concerted, dedicated effort to get better at that one mistake. Try to reduce that number. Once it's, getting really low to kind of minimal numbers, then we move on to the next mistake. And after 20 years, the list never ends. I'm always circling back. Something needs to be worked on. I'm missing something, or something's going through my head while I'm trading, and it's like keeping distractions at bay, or working through kids running into the room, or there's always something. So, or the days getting changed because of people's schedules. So now it's like I used to trade at a certain time of day, and it'd be better if I could trade at another time of day. So I'm starting a new process. It's life, just like anything else. It changes, and we need to roll with it. If we think everything's just going to stay static, you learn one strategy, trading one market at one time a day, and you're just going to be able to do that forever. That's possible, but generally circumstances can change, markets can change, strategies stop working. We need to be able to roll. And if we can do this type of work, noticing mistakes and correcting them, all of a sudden, it doesn't really matter what strategy we're trading, what market we're trading. We can come up with a new way of trading, and we just make it work by starting to reduce the mistakes, seeing how we could do things better, and we just keep progressing and chugging along. So it's never just kind of this, beautiful upsloping thing. Trading, like anything, we do our best with what we got. And one of the best and quickest ways to improve and kind of roll with whatever's going on is to keep a trading error journal, note what we're doing, need improving, and then work on them one at a time, reducing those errors, because those are a direct translation generally into profits and losses. The one weird caveat would be if you think you're making a mistake but it's making you a lot of money, then you might want to look at why that is and how you might want to incorporate that in or something. But generally, mistakes will cost us money over the long run. And so if we can reduce those mistakes, that's money coming directly back into our pocket, that basically the market, that our strategy owed us, but that we just weren't capturing. So I hope that helps you out. A lot of different mistakes to look at, and start knocking them off one at a time.